as we know, 30-year Treasury yields now to 146. How is that translating into munis? Are they still attractive given how low and how fast yields have come down?
Thanks for having me, Taylor. So, when we think about, what's been happening in munis, really the rate story has not abated the demand. So, year to date, we are at a record-setting pace. We're actually seeing about $62 billion worth of inflows into muni funds, which is the largest number we've seen since we started keeping record in 1992, 33 consecutive weeks. So, while it is harder to find some value in the muni market, with rates being as low as they are, it has not changed the fact that, high net worth, high income earners do need that tax-exempt income, and they are still looking at munis for that.
You talk about retail investors having that positive feedback loop where they see the value of their portfolio rise, then they just continue to invest. Is that a risk, though, at creating a potential, let's call it a bubble?
At this point, it doesn't feel like it's a bubble. It definitely is something that we are always paying attention to. We want to know that investors are entering the market for the right reasons. And we all know, past performance is not indicative of future results. So when we think about munis at this point in time, we feel that the market is, from a fundamental perspective, in a very good spot. And, when we look at the SALT cap deductions and the fact that people are facing much higher income tax burdens on the federal side, looking at munis for that definitely makes sense. So I think that, while there is a little bit of rear view, view in terms of why they're getting into the market, it still feels like they're doing it for the right reasons.
Can you assume further spread compression as we search for anything with yield?
Definitely. So, right now it is getting tougher and we're looking further out on the curve. So we do like, the 20 to 25 year part of the curve. We do think that that's where you can get a little bit of value still in the muni market. When it comes to some of the macro events, maybe that results in some spread widening, and that will give us a little bit more yield that we can pass on to investors. But it doesn't feel like we're quite there yet.
10 seconds, biggest risk for Q4?
Biggest risk for trade wars, currency wars, macro events.